Gold has done a good job for me. When people say to me, Rick, when is the gold price going to move? I tell them that I began my current bullion buying campaign in 1998. And in the period 2000 to 2023, the gold price moved from $253 an ounce to north of $2,000 an ounce. In other words, for the last 23 years, the gold price escalation has been about 9.3% compounded. Gold has done exactly what I've asked it to do.
In this insightful commentary, Rick Rule discusses Argentina's economic challenges, attributing its decline to Peronist policies. He questions whether the country can reverse its economic downturn and highlights potential global implications. Shifting to gold, Rule emphasizes its historical role in preserving purchasing power and notes its steady increase over the past 23 years. He expresses concerns about quantitative easing, likening it to counterfeiting, and underscores the larger issues of debt and deficits, particularly the U.S. government's staggering liabilities. This finance snippet provides a nuanced perspective on the interplay between geopolitics, gold, and economic stability. With that, let's dive into the video to hear Rick's full thesis.
Lets you reflect on that old saying about how you go broke, which is to say very slowly and then all of a sudden. Argentina at the end of World War II had higher GDP per capita than Canada did. It took real skill to wreck a country, with an educated citizenry and with the incredible bounty that Argentina enjoys. That notwithstanding, Peronism, which is Latin for socialism, succeeded inexplicably in destroying the economy of one of the most blessed countries on the planet. As I say, it took real skill. It'll be interesting to see whether or not popular revulsion with the impact of the Peronista policies will be successful in turning around that state. It's going to be very difficult to restore the economy of a bankrupt society. If it works there, it'll be a wonderful roadmap for the world. But I have my fears. After all, the current president doesn't control parliament, and he's operating from a circumstance where virtually, as he himself puts it, there is no money. Well, first of all, I need to point out on the negative side that although many people say that gold is in record territory, it's in record territory in nominal terms. Gold has done a good job for me. When people say to me, Rick, when is the gold price going to move? I tell them that I began my current bullion buying campaign in 1998. And in the period 2000 to 2023, the gold price moved from $253 an ounce to north of $2,000 an ounce. In other words, for the last 23 years, the gold price escalation has been about 9.3% compounded. Gold has done exactly what I've asked it to do. It's maintained my purchasing power, for which I'm delighted. Now let's look forward. Gold traditionally has done well during periods when people are concerned about the maintenance of their purchasing power in more conventional savings instruments. And I am concerned. What might concern me? Well, quantitative easing. If you did it, if you printed up bonners and tried to spend them at the store, you would be thrown in prison. But if you were Congressman Bonner and you did the same thing, printed up specious currency units through quantitative easing, in other words, if you counterfeited, you would be reelected with large majorities. It's important to understand, however you describe the circumstances, quantitative easing or counterfeiting, that if you print up more specious currency units backed by nothing, that you don't make the existing currency units worth more. So am I concerned because of quantitative easing? Yes. But I'm more concerned about debt and deficits. Remember, this goes to credit quality and the specious supply of money. The on-balance sheet liabilities of the U.S. government, represented by treasuries, exceeds $33 trillion.
In this next discussion, Rick Rule delves into the alarming U.S. fiscal situation, exposing the staggering on- and off-balance sheet liabilities totaling $150 trillion. With an annual deficit of $2 trillion, the U.S. attempts to solve its debt crisis by increasing spending. Rule expresses deep concern over the declining purchasing power of the U.S. dollar, citing a 7% compounded loss against a meager 4.1% interest on savings instruments. He foresees a potential crisis in confidence, urging viewers to consider safeguarding their wealth through gold amidst a precarious economic landscape. This finance snippet offers a stark analysis of the U.S. fiscal trajectory and advocates for gold as a strategic hedge against impending uncertainties.
And it gets worse because the off balance sheet liabilities of the US government, which nobody talks about, the net present value of things like Medicaid, Medicare, Social Security, the Environmental Trust Fund, federal pensions, military pensions, that number, according to the Congressional Budget Office, not some fat old cranky libertarian named Rick Rule, exceed $120 trillion. So the combined on balance sheet, off balance sheet liabilities just at the federal level in the United States is $150 trillion. You can. It's more than 5 times nominal GDP. But it gets worse. We're trying to solve that debt with a budget that's in deficit $2 trillion a year. Normally, when you're in a deep hole, you stop digging, but we're digging frantically. The thing that makes me concerned, though, the most about the maintenance of purchasing power in my US dollar savings is the fact that, as we discussed at the beginning of the interview, I see the deterioration of the purchasing power of the US dollar in the goods and services that I buy at 7% compounded, while I see the interest available on savings instruments, the foremost of which is the US 10-year Treasury, at 4.9%. Pardon me, I stated that wrong, at 4.1%. So, in terms of maintaining my purchasing power, I'm getting paid 4.1% in a currency that's declining by 7%, which means that I am losing almost 2% a year in purchasing power. And the government absolutely promises, in fact, guarantees me that they will continue to deprive me of 2% of my wealth every year for 10 years. One government promise, that I believe that they will keep. So, am I concerned about the declining purchasing power of the US dollar? Well, it's absolutely guaranteed. If traditionally gold has done well when people are concerned about the maintenance of their purchasing power, they have every reason to be concerned. Is the problem worse now than it was before? Well, consider this. Prior to the 2008 financial market collapse, debt as a percentage of GDP in the United States, on balance sheet debt, was about 25% of GDP. On balance sheet liabilities now are 110% of GDP, and total liabilities exceed 5 times GDP. What that means is that in the event, if we were to have an event like 2008, which I'm not saying we're going to have, but if we did, the ability of the government to deal with it through either printing or spending is very, very, very constrained. It's my belief that we keep spending, that we keep borrowing, that we keep on the Argentine path until we face a problem that creates a crisis in confidence. I don't know what to do about that politically. So I try to shelter myself against the worst aspects of those outcomes by buying gold.
Thank you for joining us today as Rick Rule provided valuable insights into the intricate world of finance. From the historical context of Argentina's economic challenges to the critical analysis of gold's role in preserving purchasing power, we've covered a wide range of topics. Rick's concerns about the U.S. fiscal situation, quantitative easing, and the declining purchasing power of the U.S. dollar offer a sobering perspective. Now, as we wrap up, we encourage you to reflect on these crucial discussions. If you found this information insightful, don't forget to subscribe to our channel, give this video a thumbs up, and hit the notification bell to stay updated on future finance insights. We value your opinions, so share your thoughts in the comments section below.